Session that we are going to have with a market master. Our guest today is Mr. Nishal Maheshwari. He's the CEO of Centrum Institutional Equities, and he was with us earlier on 12th of February 2024. We will be recapping some of those lovely thoughts that Nishalji gave to us, but just two lines about Mr. Maheshwari. He's been with the Centrum Institutional Equities since 2018. And before that, from 2002 onwards, he spent his 16 years with Edelweiss Financial. A fabulously knowledgeable man with an equal amount of modesty at his disposal. Mr. Maheshwari, over the last 2.5, 3 decades, has made tons and tons of money for his client and his shareholders. And once we get into the details, you will realize what an important man Nishalji is, and he's created wealth for his investors, for his clients on bull markets, bear markets, sideways markets, trending bulls and trending bears. Nishalji, namaskar, good afternoon, and a very warm welcome to you once again. 6 में से 2 निकाल दें, 4 महीने बाद आप वापस हमारे साथ जुड़ रहे हैं. आपका बहुत बहुत शुक्रिया और आभार.
Thank you, Shell. Thanks for having me here, and welcome to all your viewers.
अच्छा, अब Sakshir में we were discussing on our notes that we had written down while you were with us on 12th of February. And ladies and gentlemen, with your permission, Nishalji, we'll start with the stock of Hindustan Aeronautics. On 12th of Feb, you had mentioned to buy this at 2,900 rupees. The stock is now close to 5,500 rupees. So that, ladies and gentlemen, is one of the many reasons why we floated this lovely series of Market Masters, where you get to meet the finest brains on Dalal Street. Mr. Maheshwari had suggested BEL at 178 rupees. The counter is now above 300, and so many other stocks, Sakshi.
Absolutely. Nishalji, warm welcome to you, and to begin this special series again on hopes that you are going to be giving us such gems to all our viewers yet again. After those 4 months, we are going to be starting off, because the next trigger now is going to be the union budget, and everybody now wants to know what strategies to adopt within the markets, because interestingly, in this last 2.5 odd weeks, we've seen a euphoria, we've seen the market crash, and then we've seen a period of lull. Now, is it the lull before the storm, or how do you read the markets right now, sir?
Thanks, Sakshi. Thanks for having me here. I think it's time for us now to actually look at a more longer term point of view, because the major event which was there when we spoke last in February was the election. I think it's out of the way. The Modi government is back, basically, with a good, strong majority. I think what we need to now start looking is saying that what Mr. Modi set out in the first 10 years and how he's going to actually follow up on that. So I have, I think, 3 things basically which as an investor, if you really look at it, I think you should be invested, because one thing is market in the short term may give you a bit of shocks because you are pretty higher on a much higher level now. 23,500 and all that. So I'm saying valuation wise, we are pretty much up there. Now, what we need to do is look at for the next 2-3 years. So there are 3 themes which I see this the government has been promoting very strongly. One has been the one last time which I had spoken is about the manufacturing. And in that manufacturing, particularly defense, government is very focused on that. They will continue to support the industry on that. Companies like BEL, HAL, which we had last time mentioned, basically hold on to your portfolio. I continue to believe these will continue to create value, but you have to now be more longer term oriented in your investment. There are several other manufacturing places. So whether it is industrials, whether it is the EMS space, which is the Dixons and of this world, I think these are all places basically where the government is going to support, because they are very clear that they want to bring back manufacturing in the country and reduce the imports. So that is one strategy you should look at for the next 2-3 years. Second strategy which the government is going to come and has been very strongly advocating is the green energy. They are once again, whether it is through the EVs or through the solar power. I think government has been very, very successful at that, and they will continue to promote very, very strongly these the EVs, the green energy space. There are several plays out there. Divki was one of the plays which we had spoken last time when I was here, but unfortunately the last quarter four result was bad and the stock is not gone anywhere. I think we should wait for them to show better numbers in a quarter or two, and then we should continue to. But if you have bought it, I think you should hold it.
Nishalji, the most near-term the most near-term event after the general election is the budget, which should be addressed somewhere in the late part of next month, July. While you've listed the long-term roadmap for the government, within the budget, what do you think will be the main focus? One of the messages that the electorate very clearly sent to the BJP in particular was the underestimation of rural distress in the economy. How do you read that?
I totally agree with you, and I was about to come and say that basically I think government is going to address the rural stress and rural issues, if any. So I think they have already announced the higher MSPs, which will be definitely be beneficial to, and that too for 14 crops. So I think that will definitely be beneficial for the rural consumption. Similarly, I think there will be more steps, especially on the side of the rural, whether it is more outlay in terms of Narega, more outlay in terms of help to the rural sector. I think that one is another theme basically for this budget, at least one should play. So I'm saying basically rural consumption, which has started showing some green shoots, I think that should start working upon more strongly as we go along. So I think for the next 1 or 2 quarters, if you are looking at, I think rural consumption could be a strong play out there. To play it, I think you can look at a few FMCG companies, the likes of which are more rural focused. So a Dabur looks interesting out there. A Imami looks interesting out there. These are the two plays which we have been recommending, and obviously the levers and all of this world are obviously there, and they are also not performed and not gone anywhere. So I'm saying it could be a good time to buy a few of these old time favorites like Hindustan Lever and Dabur and Imamis of this world. In this scenario.
In your earlier interaction with us, Nishalji, you had mentioned that railways continues to show promise, and the theme has worked out wonderfully. Even if you look at wagon makers, bearing makers, 2 or 3 or 4, the government railway pack, whether represented by finance companies or by equipment makers. How do you think the railway universe is at this point of time? And what are you advising your clients as far as railways is concerned?
We continue to believe that railways will continue to do pretty well, because if you look at it within the infrastructure theme, government is very focused on railways. They have realized basically that roads can only help you so much, but I think mass transportation is the one basically which the government is focused on. And railways is a mass transportation way forward. So that's why I think government is strengthening it. We have had some unfortunate incidents. So I think definitely government will come in basically trying to work out more methods how to avoid all these things. Plus, I think the infrastructure itself in railways requires a lot of improvement. So I think government is going to allocate higher budget for the railway, and I continue to believe that the sector will continue to do well in the coming years.
Okay, so that's the view coming in on the railway space as well. Nishal sir, a lot of our viewers have also sent in some questions, so I'll at least take 1 or 2 questions with you from our viewers. First question is from New Delhi, from Samay. He wants to know from you, should he still go ahead and invest in certain PSU sectors? Should he start investing now that the entire sector has been in a dream run? Is it the wise step to do?
So it has to be very, very, I think, stock specific, because I think the general undervaluation in PSUs is already done. So PSU has done very well in the last 1.5 years, both the banking side and non-banking side. So now it has to be very, very stock specific. So be careful about it. There is a bit of froth also in a lot of PSUs. So be careful at these levels in PSUs.
Okay, so be careful is the advice coming in on that one. The other one is from Ashish from Bengaluru, and he wants to know which defense stocks can he continue to invest in even now.
I think the two stocks which I had highlighted, I think these two continue to do pretty well. Hindustan Aeronautics and BEL, those two continue to do well. There's another stock in the private side, basically solar industries, which you can also look at, but you have to be now long-term investors in all of these. These are not short-term recommendations. These are at least a 2-3 year kind of a holding period recommendation.
Fair point. Let's drill this conversation to some other part of the market, Nishalji. In 10 days from now, we will have the quarterly results upon us, and that is a time when, a lot of hopes and expectations will be either turned into reality or nightmares, depending upon which side of the buy or sell equation you are on. So, collectively, what are you expecting from corporate India in terms of earnings? And based on those expectations, maybe one or two sectors or a couple of stocks that you think will be in action for the next 15-20 days, sir?
So very difficult to give you stocks for next 15-20 days. I do not look at stock investing from that point of view. So you have to pardon me for that. But I can tell you how I'm looking at the corporate results. The corporate results, I believe, basically now what we've seen, the kind of earnings growth which we had seen in the last 2 years, I think that is tapering off very clearly. And that is largely because the growth at the top lines are not at the same level which we had seen in the last 2 years. So definitely this year it will be a more of a 10-12 kind of a 10-12% kind of a earnings growth against around 15-16% which we had seen in the last 2 years. So there is clearly tapering off. But having said that, I think banking still continues to do very well. I think banking still we have got fairly good growth. Credit costs are not high. And we expect, I think by the end of this year, you will start seeing interest rate cuts also happening. Which we had spoken when we were in February, basically, when I spoke to you. But I think that has got delayed. And maybe by the end of the current year, you will, I'm saying calendar year, you will start seeing interest rates cuts. So interest rate cut scenario, definitely you always banks do well. So that's a way I'm saying banking will continue to do well in the current quarter also. I see some improvement happening on the FMCG side because I think rural has started contributing better. So I definitely believe that rural FMCG will also be in a better situation. I think muted results as far as IT is concerned. There has been no improvement as far as if I look at it in meeting companies, I don't see much improvement out there. Defense will continue to, manufacturing will continue to do pretty well. Defense, manufacturing, all of them will continue to because they've got strong orders. Some slowdown in the infrastructure side because last almost full quarter was the election quarter. So obviously you will see slowdowns out there. Cement will also suffer because of this. So I'm saying some of them are pretty obvious. So you don't want to punish those stocks for just this reason.
Okay. Nishalji, in the universe that Centrum Institutional Equities tracks on Dalal Street, what are the outperformers that you are actually having on the top of your radar for their third quarter earnings?
So I think I mentioned banks is some of them basically, which we will continue to see some more outperformances in terms of bank because there I think the credit cost is still muted. But I think maybe in a quarter or two you will start seeing some credit cost also coming up. Now you are seeing some issues, some write-offs by state governments of some loans and all. So I'm saying some issues will happen, but I think maybe a quarter or two away. But at least in the current quarter, you will still see strong performances as far as banking is concerned. Again, manufacturing is another sector basically I'm very positive about. And there, the growth has been very good. You look at the IIP numbers and all, they have been pretty good, basically very, very strong. So I think these are the two sectors I would definitely see some outperformances coming in these two sectors.
So within the banking space, would your preference be with the private banks, the large cap private banks, which are now finally coming out of slumber, or would you still stick with the PSU banks and believe the outperformance could continue there?
No, it will be definitely private banks now. I think the performance wise, private banks have always been very good. In the stock market, they have not done well.
Yes.
You really look at it. Otherwise, numbers, ICICI Bank, HDFC has been a bit because of the issue of merger, but I think others have done pretty well actually the last few quarters.
Okay, so that's as far as the banks are concerned. Do you also believe some of the other defensives will also start to participate now? The IT space, for example, how are you looking at this entire space? Again, we do not know how promising an outlook will come in the earnings again. The commentaries have been largely, again, revolving around uncertainties and global uncertainties that are still around the sector. But is the IT sector coming out of an underperformance zone as well?
Doesn't seem to be basically. If I look at the Accenture result, which just got declared a couple of days back, they have not revised their guidance upwards basically, except for that the lower end of the guidance they revised a bit upwards, and that's why I think you saw in the last 2 days some improvement in the IT sector. But you have to understand, US has its election this year. So I think basically there is going to be some amount of uncertainty around that, and I think that's why most of the corporates will wait and watch out and see which party comes to power before committing fresh capital. So I think you will see maybe another couple of quarters of muted performance as far as IT is concerned.
Okay, got that. So that's as far as the IT performance is concerned. So I'll get in the other defensive also with this, the FMCG sector, sir. Like we're discussing about the upcoming budget, and there are hopes high that rural focus will be there. You've already talked about HUL, Dabur, Imami as some of your preferred stocks within this space. Are you also looking at some consumer discretionary names, FMEG names, maybe to be added onto this entire rural theme? What else would you add to the staples?
So in the FMEG side, yes, I agree with you. Basically, I think this summer has been really bad, and I think the corporates which are focused on to the ACs, fans category and coolers category, they have done pretty well, almost 35 to 40% kind of growth, especially the AC companies. So I think those could be the outlier this time. But has the market already discounted it fairly? I think we look at it, the whole FMCG pack has done really well. Basically, 1,000 rupee Voltas is now 1,500 already. Havels, which be around 1,200, 1,300 is now 17, 1,800. So all this has already got discounted pretty well. But yes, I think the current quarter in the FMCG pack is going to be pretty good.
This is an interesting topic to discuss a bit more, Mr. Maheshwari, because this is a longer term trend. We've seen, almost 60 to 65% of mobiles now being built in India. There is fresh capacity that's coming into the AC space. There is manufacturing of a whole host of foreign equipment now taking place in India, and some of these companies that have been a part of our lives for the last 25 years, for instance Hyundai, are now in the process of getting listed, ditto maybe Samsung and LNG. My understanding, sir, is that this manufacturing space will grow multifold from here and probably help us save a lot of foreign exchange as well. You've mentioned Dixon as one of your picks, but this is something that's already moved from 3,000 to 11,000. Purely from the point of view of it multiplying by 2x over the last 7-8 months, is this a stage to get into Dixon now as well? Or you think there are maybe new listings in this space or some other players that you are tracking? Let's not getting into let's not get into the buy or sell zone, but apart from Dixon, are there any names worthwhile that should be tracked?
So yes, I think there are a lot of names basically which should be. I think power is another space basically which you should look at as far as manufacturing is concerned. And I think there are a few names like Triveni Turbine, Tega Industries. These are some of the names basically in the manufacturing side which have been, all of them have, I'm saying every mid-cap has doubled in the last 6 months, 1 year. So all of them have doubled. But they are good companies, very strong order books, strong outlooks, very strong margins. So I'm saying these are some of the companies which you can keep on your radar. Are you asking me if you should buy it? I think at the moment, I think you have to be very careful.
Yes.
Wait for dips in the market. You will find always some event will happen and something will happen and you will find dips. Wait for that and keep your powder dry at the moment. I would recommend that.
Okay, just an interesting aside, Sakshi, Triveni Turbine is actually a 1:1 free share, which all those people who held Triveni Sugar at one point of time got free. It got listed at 30 rupees somewhere in 2012, 2011, and the office is just next door. So maybe we can revisit that space. But this company manufactures less than 30 megawatt of electric motors, turbines in particular. Turbines. And as the stock price tells you, it's done fantastically well. Nishalji, one more point I wanted to understand from you. Capital allocation at this point of time, and of course, how much of cash should be in the portfolio? Should one make a concentrated effort to raise cash?
I wouldn't deny that. I wouldn't deny that actually. I would say basically that taking away maybe now being around 15 to 20% of your portfolio in cash could be in a good situation. I think wait for this thing. There is a budget. Let's wait for the budget and see what is the government also guiding us. And then maybe if there is a new sector which is emerging, we can go and look into that sector. I think that could be a good call to make at this time.
Okay, so raise cash levels at least 20% in your portfolio if it is in cash will be a good strategy to have right ahead of the budget as well. But you know, of course, the budget is something that we'll be looking at, sir. But is there any big impending risk that you see to the ongoing bull run that we've been looking at in the markets? Is there anything that could derail the sentiment?
So I think all these events, especially in the budget side, just derail it for a moment or two. And I think one of the market, I'm saying market is a bit worried about saying that long-term capital gains basically will it be rationalized now? Because there has been a lot of discussion around it. And if that comes through, I think it could be a sentiment dampener. But not that it is going to reverse the flows or anything like that. I think, but it can be a sentiment dampener.
Okay, there could be just a sentimental downtick that we could see in the markets. Where else do you see markets of froth, overvaluation, overheating within the entire market space, sir?
So I think some of these spaces, PSUs was one of them. I think till very recently after they have corrected a bit. What I see is a lot of the mid-cap spaces, basically we are seeing a lot of froth. Some of these stocks are now quoting at maybe 60, 70 times.
Okay.
in the manufacturing side, some of the MNC stocks have started quoting 80, 90 times.
Yes.
I think these are all froths basically. And there is so much money which is chasing the stocks. And that's why you are seeing that this kind of a multiples some of these companies are getting. So one needs to be cautious basically because nobody has this kind of visibility of earnings for 80, 90 years of any company. So when you are paying a PE, you are saying that same kind of earnings you are going to generate for the next 80, 90, where whatever is the multiple is the number of years of earning visibility you have. So has to be very cautious about it.
Okay. Nishalji, because you've spent so much of critical time in our markets at a time when they've expanded and contracted over the last 3 decades or so, one flashing signal that we sort of record with great detail every day is this number of block deals. Promoters partially exiting at very frothy valuations, and a lot of our friends that we speak to coming in with tons of money buying the same stock. One, as a long term observer of the market, how do you see this a very sharp rise in block deals? And second is this this huge pipeline of thematic funds that is now coming into the market. As something that has moved consistently for the last 8 years, we are in a bull run in that size. How do you see these two developments?
So, Shail, I would actually put this whole thing into a different perspective. So, I'm saying what the one major thing which has really changed in the last 5 years is the willingness of the Indian population to invest in equities. And that is what has really changed the whole thing. If you really look at it, I was just doing numbers. We were something like 2.5% of the annual savings. It used to get invested, I think, 5 or 7 years back into equities. Today, it has just gone up to 5%. 5% of our annual savings, net annual savings, is only actually going into equities. And that is what has created all this opportunity in this market. So, why I'm saying basically that yes, block deals, everything is there. And historically, I would have been worried saying that the promoters are all getting out with their blocks. But today, I am not really worried about it for the reason because there is a very strong flows which are coming in. People have realized that if they want to invest, they have to think in the long term as far as equities is concerned. And SIP as a culture has evolved quite a bit. And the second thing which I see here is today basically the younger generation who is investing into equities. And if you remember during our time, basically when we were young, people only who were into the stock market like ourselves basically used to invest into the market. Otherwise, everybody used to think that it was a satta bazaar. But today's generation basically is totally different. They are all now spending some amount of money basically into the stock markets and they are doing SIPs. Whenever I speak to youngsters, they are very, very clear saying that this is the way basically they want to create life savings. So I'm saying that culture is totally different. That's why I'm not really worried that this market is going to go in for some big correction. Because if you really look at it, in the last 1 year, FIs have sold almost 50,000-70,000 crore worth of equities. And nothing is happening to this market.
Nishalji, I was just about to say that you are 24 years old with a couple of months here and there. So there's no question of aging. This is, yes, a very young bull market. And I'm sure Sakshi will be here for next 100 years. हमारे कोई ऐसे ज़्यादा अभी time नहीं निकला है. आप ऐसे मत कहिए. All of us are going to have a great time in this bull market, which is, absolutely point well taken. So blocks don't bother you.
No, it doesn't bother me. The only thing is, I'm saying, what amazes me is a 20,000 crore block getting done just 2 or 3 days back in the market.
Yes, exactly. It was
got done. ITC was $2.5 billion. Then the other day, basically, this Indus Towers gets done.
Yeah.
It gets absorbed. I'm saying
Absolutely.
market. That is amazing, basically, and that shows that there is a huge amount of depth in this market which has got created, and they could have only come basically when the domestic market becomes big and people start believing in the Indian economy. This is the domestic guys started believing, saying that this is the way to create wealth, and I think that is the most amazing thing which has happened in the last 5-7 years, and I've never seen this in my whole career. And if I was 5-7 years, 10 years back, basically, I would have just waited in my bated breath saying that when it's going to crash. In the last 4-5 years, I'm in the last 2-3 years, that fear seems to be now waning. basically.
Yes, absolutely.
So, sir, just wanted to ask you, some of our wise experts also on our channel were also mentioning erstwhile, I remember, that a bull market really, sustains for about 5 years odd or so, or 6 years at the max. We are already in the 4.5, 5 years period now, since the time we started seeing this bull run. Any signs of it wading away?
So I'm saying basically those historical, you see some frothiness which we are seeing in the market, it will definitely go out of the system. But will we go to a 15,000 Nifty or a 12,000 Nifty? I don't see that happening. That is what I was trying to say. Some correction is going to definitely good for the market also. But what we are saying is here a new class, new generation of people have started investing into the stock markets, and we are still only 5% of our annual saving which is going into equity. So it's not a large number that if you look at abroad and all, it's almost like 30%, 40% of the annual savings are going to equities out there. So we are nowhere close to that. So maybe a 5 will fall to a 4% kind of a number basically, but I'm saying the base is very large. So I do not see a major fall until something. I'm saying if the economy continues to do well, see, everything is at the end of the day basically based on fundamentals. If the fundamentals continue to remain strong, I do not see very big crashes or any very big corrections happening.
Okay, so then what would be your outlook on the Nifty if you could share with us a 2024 target, if not maybe a next 2 to 3 year target as well?
So I'm saying very clearly now the undervaluation is gone, so you are not going to see any improvement in private PE ratios. The PE ratios, you are at the peak. Now your Nifty or any index is going to grow at the pace of the earnings. So if there is a earnings 10-12% growth, your broader index should grow 10-12%.
Fair point. So let's say half the year is out from us. So that's 2,500 on the Nifty, half of it is gone. So let's say 24,500, 25,000 by the end year.
So I'm saying at the beginning of the year, I'm saying calendar year, if you look at it, we were at 22,000?
Yes, sir.
22,000. So I'm saying 10% लगा लीजिए वहाँ से. That is what I see basically the earnings growth happening. And 10% that is like 24,000, 24,500. Froth थोड़ा सा रहेगा अगर बहुत अच्छा लग रहा है सबको budget भी अच्छा आ गया. Maybe market will drag it to 24.5 types. That is I think my understanding of the whole market.
Oh, okay, fair point. Now let's look at one part of the market which refuses to fire up, which is our friends from the Western Hemisphere. They've been pulling out money, as you rightly said, 70,000 crore over the last 6 months. So what possibly is the missing angle to the pie? When Indians were not hopeful about India, it was our foreign friends which bought every single blue chip and raised their stake to above 23-24% of overall corporate ownership. Now when Indians are completely in sync with what foreigners used to be thinking, these people are now selling. Is it pure valuation?
So I'm saying basically you have to look at it that for them the world is the market. For us, India is the market. That is the only difference. So every time basically when they sit on the table and say, okay, we want to allocate money, they would say, okay, India at best is going to now not re-rate, as I was telling you. It's a growth market with 10-12% kind of a growth. But is there a China available where there is huge undervaluation? I should allocate more money to China. So I'm saying if you really look at it, there is nothing very, very difficult to understand. If I was a money allocator, I would have also done the same. I would have said, okay, I made good money in India basically when everybody else was underperforming. I put my money into India. I now made good money. Here from onwards, basically 10% growth will be there. So I should be close to only the benchmark, which may be whatever 10%, whatever I'm following. So I should be invested that only, and I should have now let's go to undervalued markets and I should increase allocation there. And that's what they are doing in the last year.
Fair point. I think
very difficult
that's
to understand. Nothing very difficult to understand.
Yes, till about 4 months ago, the Chinese IT sector was available at a single digit PE, as also the rest of the market. And from that point onwards, just the ETFs have made 30%, forget about individual stocks. So maybe, yes, that's a very well point taken, sir. The other thing we wanted to understand, and perhaps it should have been the second question, that now we are in a coalition setup, Nishalji. Of course, you've navigated about 20 years of your professional life in a coalition government. But from the 10 years of political stability that we used to talk about in the first paragraph of every equity report, this thing is missing. But do you see it impacting maybe 2 or 3 years hence, the absence of a political majority?
I do not see much. See, if you really look at it, basically, in the last 20-25 years, most governments which have come, whether it was coalition or with majority, basically all of them been pro-growth. So, yes, so there has been some issues basically with certain periods, but I'm saying otherwise most of them have been pro-growth. So if this, and I think basically India that way has got its bigger benefits of demographics and all that you cannot take away. So those things, I think any government comes in, they will all follow with that basically, because the whole, if you really look at it, the population itself is growth oriented. So everybody has to follow basically what the electorate wants. So they want growth and they will all follow growth. So I'm not really worried about it. We have seen historically, I think all coalition governments during that time also markets went up from 2000 to 8,000 and thereafter it collapsed in whatever it was. So I'm saying not much worried basically. Some hiccups will be there whenever some event happens. But I'm saying broader, this thing should be strong, only growth. And that's what I was saying basically. You have to take a call on 2-3 years rather than actually start trying to invest for a quarter or two.
Okay. So, sir, for an average investor out there beginning now, if somebody comes to you with a 10 lakh rupees and asks you to please help him or her to create a portfolio, how would you really advise to spend that 10 lakh rupee? You did talk about raising some cash, you did talk about equities going at 10-12% odd. So how should one be really deploying that money if you could segregate that?
If you're not invested at all in the stock market, I think you should immediately go and put 50% of your money into the stock market at the moment.
Okay.
Choose your funds, basically, whichever it is, basically, and thereafter you wait and see if there are corrections in the market which gives you more opportunity. I'm saying from a zero, if you should be immediately invested, because I'm saying longer run, a 10-12% kind of a growth most markets will give you, as I said, I'm saying the Indian market will give you, because I was saying the earnings is going to be around 10-12% kind of a growth. So choose your funds basically where you want to invest, that you can take an help of, I'm saying whatever advisor. Choose your funds, invest 50% of your money immediately, and thereafter wait for the corrections to happen in the next 3 months, 6 months. If nothing happens, basically, budget is over, 3 months later, go out and invest all your money and just sit tight. There is no reason for us to be worried about that.
Okay, Nishalji, we've gone into the bare bone details of the equity market, but one major macro event is upon us, the inclusion of Indian bonds in global bond index, as of course the Bloomberg index. Explain to us, our viewers, as to how that will change the corporate dynamics of borrowing costs, as also how does it help the overall Indian balance sheet?
So two things will happen, obviously. Once you get included into an index, there are a lot more people who are willing to buy Indian debt now, because now it is a part of an index. Yes. So corporates raising money abroad. So when the country debt starts becoming included in there, so there is more buyers, and obviously that's why your cost will go down.
Yes.
And if at the country level my cost goes down, so will my corporate cost goes down. Corporate debt cost goes down if I go and raise it abroad. So that's the benefit will the Indian corporate will get. Now, how does it help the Indian investor? I think the only way it will be is basically that the rupee will definitely appreciate. Yes. If you have this kind of flow happening, rupee will appreciate. And but that may not have any direct impact as far as the stock market is concerned, except for that your reserves will increase, which are very healthy at $600 billion. So I don't see any reason there. But I'm saying overall cost for the country as well as the corporates will definitely come down because of it.
Right. Nishalji, it's been an amazing 45 minutes, and as usual, I have noted down everything you've said in terms of sectors, macro picture, individual picture, and of course stock picture. So when the next 3 months we have you again, we will be again showing those wonderful charts that you've talked about, and again telling our investors that if you have not listened to Mr. Maheshwari on February 12th and not on 24th of June, then that's the date to start listening to him. Thank you so much. I hope you enjoyed our questions as much as we appreciated your answers, and here's hoping that all that you research and all that you suggest works out brilliantly and beautifully, just as it has over the last 3 months.
Thank you. I hope I'm going to be so lucky again.
Absolutely.
Thank you so much.
I think Shell will share with you one tip that he always does for his stock portfolio and investments to really flourish, and that is having a very sweet tea.
Whenever I start a conversation with anybody, I have an eclair chocolate, so that not only keeps my sweet tooth, actually sweet denture, very busy, as you can see how I have grown, but it also injects that sweetness into our conversation. Thank you, Nishalji, and we hope to meet you sometime in our studios in Delhi, and if we are in Bombay, then we are coming for a cup of tea, chini wali.
Definitely. Please.
That, ladies and gentlemen, was Mr. Nishal Maheshwari. He's the Chief Executive Officer of Centrum Institutional Equities, a man who's made tons of money for his investors, for his customers at 2 major brokerages, and he paints a very, how should I say, a cautiously optimistic picture of the markets, in which he says valuations are right up there. This is not a market that will re-rate. It's just a growth market which will appreciate 10 to 12% from here, just as earnings growth will go in. But he's very, very bullish on defense, which he says now should be 2 to 3 year old kind of a holding structure. And of course, the one good point also he mentioned was that you should be above about 15% in cash in the markets of your portfolio, and wait for the budget. You just might get some new sectors that might emerge from the budget speech, and then we can go after them. That, ladies and gentlemen, was Market Masters. Now the pulse is back. How should I say, the ins and outs of markets every minute will be tracked on BTTV. This was a pause for you to enjoy the landscape that might emerge 1 year, 2 year, 3 years later. Over to Sakshi.
All right, viewers, we will wrap it up at that, but do stay tuned. We will be getting you everything that's buzzing on the street from the world of business, finance and stock markets. So stay tuned. It's an action-packed day for you.
साथियों,